Okay, everyone, I just wanted to kind of create a video for you to kind of show you how the PPP loan, when you receive it, how it gets recorded in your financials, as well as how to record it when you spend it. We're getting a lot of questions on that. I just want to kind of clarify it in a sample income statement for you, as well as kind of walking you through when loans get forgiven, how they're treated. And the IRS on April 30th announced their notice on how the forgiveness of loans should be treated. And immediately afterwards, a couple people from Congress kind of put their opinions out and and it was very conflicting on what the IRS said. So, as I stated, if you're a client of ours, as I stated earlier, this whole PPP loan process has been very fluid. It's constantly changing, and just be on the alert for future changes on how the loan forgiveness kind of gets applied. So getting right into this, again, as you worked with us, you kind of know how to read financials, but here's the balance sheet, here's an income statement, all, as an example here. You got your assets, you got your cash, receivables, this is everything that you own. And then liabilities, this is everything that you owe to vendors, to bankers, lenders, etc. And then here's your equity. And then here's the income statement. So example, here's your revenue, and then here's some examples of expenses. And then I created this third section here of journal entries. So you can see here I have debit and credit kind of written next to each category, and debit is for assets, that increases an asset by debiting it. Credit increases liability, credit increases equity, credit increases revenue, and debit increases expenses. And as you would imagine, if you credit asset, that's going to decrease it. If you debit liabilities, that's going to decrease it, etc. And I have some journal entries here. So the first part is you received the loan, and in this example we're going to say you got a $25,000 PPP loan. So congratulations. So to kind of record that is your liabilities are going to increase, and we suggest creating a separate general ledger account here called Loans PPP Loan, and this would be under the liability section. And then if you can, you may want to create a separate bank account line item, call it Cash PP Loans. It's not necessary, but if you do decide to do it, just say the $25,000 came in, it went to your main operating account. You could, separate it out here. And by the way, you can see here by, total assets equals liabilities plus equity. So total assets here is 127,500. Liabilities plus equity is 127,500. So when I made that change, so just kind of show you what this looked like before, you can see 127,500, 127,500, and we're going to break this out here. We're going to show that. So now you recorded the loan, right? So you got the proceeds, you got this loan amount. So now you want to spend it. So there's two ways of kind of doing this, and I kind of deferred to one way. So the one way is you spend your cash, right? So you spend it on, say it's wages. So the one way to record it is you're going to reduce your loan or your cash balance by $7,000. Right, so that's going to reduce the amount of the loan, and you're also going to reduce the loan that you got from the bank, right? So these are always going to be in line, and then when it gets forgiven, there's nothing for you to do, right? Because you're constantly reducing this amount, and you're reducing this amount. At some point, it's going to be zero. So there's nothing on this income statement that you need to do. That's one option. The other option, which I prefer, option number 2, let's clear this up. So option number 2 is you're going to reduce your loan amount, right, by how you spend it, and just say we're going to spend it on wages, right? So we're going to reduce cash by $7,000, and we're going to increase wages by $7,000, okay? And you can see here the net income changes, and that net income is linked here. Now you can see your assets is equal to liabilities plus equity. So this is still all in balance, which is good. The beauty of this option number 2 is you're keeping track on how you're spending it. Your cash is decreasing, but then you can see this loan amount here, right? What are you going to do with this? So when a loan gets forgiven, just in general, so forget about the PPP loan, just say you got a regular loan, whether it's from a bank or from some other creditor, and just say you don't pay it down, you can't pay it down, and it gets forgiven, right? When a loan gets forgiven, it's actually income to you. So in this case, and you got to pay tax on it, right? So as we all know, you pay tax on your net income. It's not what's in the bank, it's on your net income of the business. That's what's subject to tax. So when you can't pay a loan and it gets forgiven and that creditor goes, okay, we're going to forgive the loan, for tax purposes, you got to pay tax on that. So that goes up here, your net income increases, right? Under the PPP loans, if you read the details, it says there's no personal guarantee, and the loan forgiveness, if you use the loan for what its intended purposes are, where at least 75% is for payroll and the rest is for rent and utilities, then that amount is non-taxable, right? So that amount is not subject to tax. Now, what the IRS came out with on April 30th, right, they said that the expenses, the amounts that you use this $25,000 for, you're showing here, you cannot deduct. So for tax purposes on here, you can't deduct this. So as you can see here, we'll change this to 0. What they're saying here is you can use this on payroll, you can use it on rent, you can use it on utilities, but when it comes time for taxes, your net income, it's as if you didn't use this loan for payroll expenses. So essentially, to say you use this entire loan, we can say that it's $25,000 is forgiven. You got $25,000 was used for wages. You're still kind of at the same spot because it's kind of like net, right? You're netting, it's like a net 0 balance, and that's what the IRS is essentially saying. So it's kind of like option number 1 here, right? Where it's really never shown on the income statement for tax purposes. Your net income is still $26,800. You're just reducing this loan amount here. But I think as a business owner, you want to keep track of how you're spending money. So that's where I kind of resort to option number 2 here. And what you do is you're going to use, just say you use the $25,000 for wages and salaries, and that's all it's used for, your $25,000 loan. When it gets forgiven, when you go to the bank and you kind of show them all your support, what you're going to say is, all right, we use it for this, and they're going to say, okay, it's forgiven. So you're going to reduce this amount to 0, right? You used up all your cash, and then this loan amount will go up here, but it kind of gets netted with this wages. So your net income is still the same. Your balance sheet balances, you used all your loans, you used all the cash that you got from the bank on the loans, you're paying down the loan, it's forgiven, and that's essentially it. So that's where the IRS is standing at this point right now, April 30th, and this video is as of May 4th. This could change because there's a lot of people that are kind of disagreeing with the IRS on how this loan forgiveness should be treated. What people are saying is, okay, you got this loan, it's forgiven, but these expenses should be deductible. Now, in my eyes, as a CPA, I think that's kind of like double dipping, right? Because you're getting this loan, it's forgivable, and in the PPP loan agreements, they're saying that it's non-taxable income on that forgivable loan, but you're also allowed to take this deduction. So we'll see where this stands, but as of now, kind of going back to this original example, you got this $25,000 loan, and you can choose option 1 or option 2 on how you record it. My suggestion is you stick with option number 2 because you can kind of see where you're spending these expenses. And I also suggest that you kind of create another account for rent, right? If you're going to use it for rent, and call it rent-PPP loan. so you can kind of keep track of where this is being spent. And then this account will eventually go to zero. This account will increase, and then when you've spent it all and you go to the bank and you ask for forgiveness, then this is going to go to zero and this will go to 25,000. So this is the first video. Let me know if you have any questions after you watch it, and we're going to launch some more videos as we get more questions from people. Thanks.